Let's get right to the big market moves we've seen on this morning's news. From the G7 summit, our guest host today is Mohamed El-Erian, Allianz Chief Economic Advisor. We're also joined by Jim Iuorio from TJM Institutional Services. He's also a CNBC contributor. We've seen you a few times recently, Jim. And what do you have a moral? What's the moral of the story? We can't ignore things that the president says or tweets about, and yet it seems like things get walked back when we go to one extreme. It always seems like, the pendulum swings, and we're responding to all these things. I don't know if it's worth it to try to catch every move.
I'm amazed that we move the way we do. The sensitivity to certain things is astounding. But there is a couple takeaways from me. The news we had on Friday, when China's comments came out, they were pretty concrete. When they accused us of unilateralism and protectionism, those were some harsh language. Now, when we broke on that, and that's completely understandable. Now we get this thing where Trump says, yeah, they called. We're talking on the phone. Don't worry about it. The market is really quick to believe that on the upside. Now, I know you guys, when we start to talk about technicals, I don't know, you guys don't put as much faith in them as we do, but 2,800 level in the S&P is a very big level psychologically. We were around there last night. I think the market was looking for a reason to bounce off it, and we got it. Now, the broader takeaway for me, and this goes back a whole year and a half, these big up moves that began in February a year and a half ago, with these big up and down moves, they tend to shake out the weak hands, and I think it leaves us with a stronger market medium and longer term, if we can finally get our footing under us. Now, if you would have caught me last night, if we would have gone below that 2,800 level, my tune would have changed a little bit too, because I, fall victim to the psychological effect of it as well. But right now, I think we're fine, because it seems like we want to rally off this.
I mean, there's other markets that do some crazy stuff too, Jim. I mean, 144 on the 10-year, and then you look at the way the yuan reacted on Friday. These are moves that take things very, very seriously for things that we're trying to blow off, right?
Oh, there's no question about it. I still look at it, to me, it's just the risk assets and the risk-off assets. And when I see people flocking to our 10-year and driving it down to 143 or 142, whatever the low was, that's amazing to me. But then I look, why shouldn't that be the case, considering that is a fat and sexy yield compared to the rest of the world, which is trading at negative yields. So to me, that's pretty understandable. And if we're on a march to zero, I'm starting to believe that's probably what's going on in the 10-year, just because of the way the globe is. But to me, it's kind of all the same move. Gold as well. Gold shot higher on the move lower, and then as soon as we came back, gold's gone down to about steady.
So, Jim, two things. One, there's a view, which I share, that the reason why we're seeing a lot more volatility across all markets is that markets have less confidence in the ability of central banks, which leads to the second question. You said when we regain our footing in markets. What does that mean in your world, regaining our footing? And how do we do it?
The second question first. To me, it's a technical level that draws people back in. 29.50, if we get above that in the S&P futures and we seem comfortable there, I think that'll be a renewed confidence, too. Have we lost faith in central banks? I think, of course, we have. I think the only thing we think central banks can really affect are pushing money into risk assets, and even more specifically, pushing money into U.S. risk assets, because I think the rest of the world is, it clearly seems to be flocking here, not just for the yields, but almost for the safe haven effect of the U.S. stock market. And granted, I think it's far down on the list of safe havens, but I think it makes the cut.
August has not been August. That's one thing. Do you still think that some of these moves are exacerbated by so many people not being in, Jim? Because This has been the craziest August that I can remember in a while.
No doubt. I think some of the moves are that. And there was a couple of the down moves in the last few weeks that had extremely low volume. But all I'm left with there is wondering and scratching my head, what would it look like if there was more participants? I can't produce a counterfactual, so all I have to is tease that out. You know what I mean?
That's the thing.
But yeah, there's
it's not
no
like
volumes.
there's not crazy headlines to go along with it. It's not like these moves are precipitated by nothing.
Yeah, but the one thing that I want to stress is that these moves lately have just been dominated strictly by this one particular headline, going back in and out. It's not, if there was huge market positions and complacency, I think these moves would be bigger to the downside. Now, maybe the fact that there's not many participants makes people less likely to get margin calls and take things off. I don't know. Again, I can't produce that counterfactual.
Mohamed, we talked earlier about other periods during this, expansion, during this bull market, where you did have a long period of sideways U.S. stock markets, very, very low bond yield, very cautious investor positioning and a fear that we were tipping back into recession. Whether you want to talk about 2011 and 2016, is it wrong to consider those reasonable analogies for what we're going through right now, do you think?
I think there's one big difference is that the rest of the world wasn't in the mess it's in right now. That is a fundamental difference. And we're seeing technical levels elsewhere. It's interesting because the temptation right now is to fade the U.S. market in relative terms because the outperformance of the U.S. markets has been so large. But everything Jim says, everything that I look at says, be careful, don't do that. In relative terms, the U.S. markets are still in a better place. It's the overall call that's getting harder and harder.
Gotcha. All right. So I'm allowed to bet on college games in New Jersey
Because you live in
legally?
New Jersey, yes.
And colleges, sorry, Jim, I don't know if you're paying attention. College football has started.
Yeah, no, I watched a game Florida-Miami.
You need a pastime?
I'm just wondering whether I want. It is when you have money on the line. It's more fun to watch the games, but I don't. Do you really want to get involved with that,
$5?
Santoli? Do you want to?
I consider it a voluntary tax on the overconfident.
Oh, kind of like lottery tickets are a tax on the stupid.
Exactly. And Serena plays Sharapova.
It's voluntary, so
too.
you have fun.
I mean, there's other things besides. I just am trying to broaden our view out a little bit for what's important in life. You've got the Mets.
And the Jets coming up.
Exactly. Yeah.
4 and 12
my
season.
point exactly. So you might as well stick with this, the markets and the bond market. Anyway.
All right.
Thank
Bye,
you.
Jim.
See ya.